So give us a sense of what's the big deal with data centers now that didn't exist before the rush to AI? We've had them around for some time, right?
Yeah, David, I think that the key to understand, the primary thing to understand is the difference in the compute workload that's going into data centers now versus what it was in the past. So in the past, we were building data centers that were in population centers that were providing ultra low latency communications so that we could get YouTube, so that we could get Netflix, so we could get TikTok, right? So we could get all of our things that have been driven mostly by video applications. Now, as we're moving from applications that need ultra low latency communications outside the data center to applications that need massive amounts of compute. So think of it, doing large math problems, algorithms. This is what AI is doing inside the data center. Compute equals power. And then inside the data centers, you need a lot of compute close together, so you need really high power density. And so these are kind of some weird numbers, but historically data centers were, let's call it 7 kilowatts for an entire rack of computing. An Nvidia H100 server, one by itself takes 10 kilowatts. And then
although Nvidia's gross margins have been questioned, Morgan Stanley analysts claim that the worries are mainly unfounded in a note to investors on Monday. Although a modest pressure on Nvidia's margins is anticipated, experts at the bank emphasize that this is a strategic move to maintain dominance in the market for AI processors. According to Morgan Stanley, a major contributing element to this margin pressure is Nvidia's choice to embrace an annual product cadence and a more aggressive product positioning. The analysts noted that although Nvidia's gross margins are expected to decline somewhat, they believe the fears are exaggerated and that the company's primary focus is on providing value to customers while keeping competitors out of the market. The decision to shift to a more aggressive product positioning, including the yearly product cadence and the choice to price Blackwell for good value, will have the most impact on gross margins, the bank continues. They project a decline in Nvidia's gross margins from 76% to approximately 74.5%. According to Morgan Stanley, the opportunity to exert pressure on the entire competitive set by lowering GMs from 76% to 74.5% seemed like a fair trade-off. As mentioned above, one major aspect affecting margins is the release of the new Blackwell chips. It was admitted by Morgan Stanley that Blackwell's gross margins will be lower than those of Hopper, mainly because of yield problems in the early stages of manufacturing. Low yields on Rev 0 of Blackwell silicon caused a delay from Rev 0 to Rev 1, leading in an above-average inventory reserve. Morgan Stanley predicts that Nvidia will continue to hold a strong market share in spite of these obstacles, probably surpassing 85% of AI processors this year, and that it will continue to rise in 2025, although the company is projecting gross margins of mid-70s for the entire year. Morgan Stanley thinks this is unduly conservative and that the pressure on margins is a component of Nvidia's larger plan to control the AI ecosystem. If you want to keep up with Nvidia's latest updates and keep up with the stock market latest news, you can subscribe to our investing tutorial channel as we post daily updates about the biggest changes and catalysts in the market. So click the subscribe button if you don't want to miss the newest market updates. Now back to today's video.
Stock down 9.5% yesterday, lighter on its feet this morning. $278 billion of a wipeout. Why? What was the trigger, or was it just some kind of an August redux?
Yeah, look, I think there's just fears in terms of growth, not just from Nvidia, but I think across semis, and that's why you just saw a disaster day, for just the whole semi food chain. But I just look at it, has anything changed? And look, that's why we're in Asia the next few weeks. Nothing's changed from a demand perspective. Demand continues to way outstrip supply. And then you look at earnings, I think it was sort of a muted reaction. But I think we take a step back, and this is a story where the demand continues to ramp up from an AI perspective. Blackwell delays, put to rest. I think these sell-offs, in my opinion, are buying opportunities, not the time to panic.
I just wonder, Dan, if an antitrust probe, if that escalating from the DOJ, this subpoena, if it hits your registry of concern at all for Nvidia?
Yeah, look, I think you have to put in the context of broader tech. I mean, Apple, of course, Google, will have another trial next week. I mean, that is just sort of the tone in the Beltway. I mean, we are just going to see some of those drum rolls. Look, we're not too concerned about this for NVIDIA. I think just because when you actually look at what's happened here from an execution, the reason that they've essentially dominated it is just because how stellar the execution has been and how they've just been so far ahead. AMD and others will ultimately get into this sort of race. But I just view this as more of a scarier headline than the reality. And also in the context of what's happened in big tech, NVIDIA is just part of the club that continues to be part of that pressure, Beltway versus big tech.
In spite of the continuous market volatility, Evercore ISI analysts stated in a letter to clients on Monday that the latest sell-off in the S&P 500 represents a buying opportunity. The company claims that since NVIDIA's earnings release, investors have been uneasy, doubting the scope of the AI opportunity. However, Evercore analysts don't see any indications of a bubble similar to the one that occurred during the Y2K period. They contend that the market is still expected to grow significantly, estimating that the S&P 500 will reach 6,000 by the end of 2024. As long as there are no indications of a bubble causing a Y2K-like AI implosion, the continued volatility following NVIDIA's EPS offers purchasing chances, according to Evercore. The company goes on to say that although acceptance of AI may be gradual, as was the case with the Internet in its early years, its growing reach is anticipated to boost productivity and provide long-term economic benefits. The experts pointed out that structural bull markets frequently have AI air pockets and added that the absence of a bubble reduces the chance of a collapse, even at high prices. With Q2 2024 data indicating upward revisions and faster growth, the company also emphasizes improved earnings and broader upside involvement across many industries. Furthermore, repurchase stocks have consistently excelled throughout Fed rate cut cycles, making them an appealing investment alternative, according to Evercore ISI. In addition, they advise controlling volatility with techniques like QQQ strangles, emphasizing that short-term swings will still be fueled by political unpredictability and impending events like the CPI report. Despite the market's current discomfort, Evercore views the recent decline as a tactical opportunity for investors with promising long-term prospects. So what does this really mean for NVIDIA's stock? Let's find out, but first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button, subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
And the future of semiconductors. Can you just lay out kind of the state of play right now amidst this kind of global competition that we're seeing?
Well, I think you see global competition, but it remains a competition between companies. While what's very interesting is that while geopolitics matters, risk reduction matters, supply chain resilience matters, this remains a product and performance industry. And this remains an industry where if you have the best product, if you have the best technology, your customers are going to buy it. So even though we're 5 years in, 10 years in, 15 years into the chip war, the industry hasn't really changed that much. And the statistic I mentioned the most is that even though everyone is trying to de-risk from Taiwan, Taiwan's share of global semiconductor manufacturing has actually gone up in the last 5 years. And the level of supply chain change is actually quite small. Where are we in the competition right now? Everyone's doubling down on AI. We may not see a bump from new smartphone sales, but from a technologist perspective, what's going into these smartphones is actually quite. We are moving to AI phones, which means you have an NPU inside the processor. We're going to see an upgrade of SoC capabilities. We're going to see real-time translation. We're going to see lots of things of AI, not just in the data center, but at a device level, which hopefully expands the pie of the AI market.
The part of your survey also includes asking Chinese companies how they feel about what's going on. So how do they feel?
Well, so I think the number one thing is that everyone in the industry is optimistic. And again, it goes back to, we say we have a chip war, we say we have all these geopolitical problems. These last 5 years have maybe been the best 5 years in the entire history of the industry for everyone. So so Chinese companies believe the future is bright. They're going to see growth. They don't see margins collapsing. They actually see margins going up. But they do see some fundamental differences with how, when you ask actually Chinese companies, where will the Chinese semiconductor industry be the most successful? They don't say AI. They say automotive, electrification, which are markets where China has more downstream industry control and a larger percentage of the global TAM. In addition, while Chinese companies and Chinese respondents are optimistic about the Chinese market, they actually still have a tremendous amount of respect for the United States ecosystem. And the one I always pick out, about 1/3 of our participants sit in China. And we ask them, where will the best talent in the industry go? What place is the most attractive for talent? 85% of people working in China said the United States. And 60% of the people sitting in China said the United States will be the most attractive for capital investment in the semiconductor industry. So I think they're very clear on where the competitive balance lies.
When Nvidia published its first 13F filing in February of last year, it became clear that the business had purchased a small number of stocks during the last quarter of 2023. As they're all involved in the artificial intelligence, AI field, it's a smart move on the part of Nvidia to diversify its revenue streams beyond semiconductors. At the end of 2023, Nvidia purchased 1.7 million shares of SoundHound AI, with a market value of $3.6 million. Nvidia's holding is now valued at over $7.8 million, representing a huge 116% return in less than a year, with SoundHound stock currently trading at $4.50. Being an expert in conversational AI, SoundHound has amassed a remarkable clientele. The business's revenue is increasing swiftly, and the management has very high expectations for the future. A range of conversational AI products has been developed by SoundHound for use by businesses in the food service, automobile, and hospitality sectors. The user can take advantage of AI's power without typing a single word because they are trained to identify voice inputs and reply accordingly. To lessen employee workload, restaurant chains use SoundHound AI to autonomously collect orders from customers both in-store and through the drive-thru. In the second quarter of 2024, SoundHound brought in $13.5 million in revenue, a staggering 54% more than in the same period the previous year. The impressive outcome, together with the Amelia acquisition, led management to raise its full-year guidance for 2024 and 2025. The business has revised its revenue projections for this year to $80 million, up 74.3% from 2023. This will be followed by at least $150 million in 2025, including $45 million from Amelia, which will signify a faster growth rate of 87.5%. In addition, SoundHound recorded record-breaking $723 million in bookings at the end of Q2, nearly doubling from the same time last year. The company's order backlog is represented by bookings, which makes its long-term revenue pipeline appear quite strong.